Well, Nigeria has suspended plans to raise about $950 million from the Eurobond market due to unfavorable market conditions. Meanwhile, the Central Bank of Nigeria has directed banks to accept indemnity from customers from highly secure online fund transfers. Nnamdi Nwizu, co-managing partner at Commercial Partners, joins me to discuss these developments. Nnamdi, thank you so much. It's a pleasure to have you on the show today.
Same here, pleasure to be here.
But what do you make of this latest development? I'd like to hear your thoughts.
Well, it's not surprising if you look at what has happened with regards to the Eurobond market and how yields have moved up over the last, I would say, maybe about 5-6 months. It's totally expected and understandable. We've seen that with inflationary pressure in the US and the Fed starting to raise interest rates, not just the Fed, honestly, but a lot of central banks, Bank of England, and a number of other countries. We've seen funding rates go up. We've seen Eurobond yields rise aggressively. If you look at Nigeria, for instance, where in 2020, for instance, there are bonds that were going to mature in 2025, right? 5-year at that point in time was trading at about 4.12%, and today it's trading at 9.3%. If you look at the longer dated bond, which is currently trading at about 11.2%, that's a 2051. Or even if you look at countries look at Ghana, for instance, where it's 2026 maturity Eurobond is trading at about 21%. It's making it more difficult for a lot of these sub-Saharan African countries, which have been heavily impacted, to come to the Eurobond market to still raise funds. Cost of funding has gone up pretty significantly. So it's not surprising that has happened. The question would be, so what next? Because if you can't borrow in Eurobond market, then that means they have to other sources. Either they look at possibly multilateral agencies, the likes of World Bank and Co, to try and see if they can structure a debt from them, or they focus more on borrowing in Naira, which is the other alternative, which means that you significantly see the Naira borrowings rise locally.
No, so are you saying that you do not foresee a window down the road where, rates, I don't know what will be the catalyst, where it will be favorable to go back to the market?
Well, I mean, it might happen, but looking at how market has played out in the recent past, it's a bit of a difficult one. If you look at the fact that people still expect the Fed to raise rates by roughly at least another 100 to 150 basis points from now to the end of the year, which would only put more pressure on the Eurobond market and sub-Saharan African Eurobonds, then the question is, what will create that window of opportunity to allow Nigeria to come back into the market, unless they're prepared to borrow at significantly higher levels than they have in the past. So, I mean, it is possible, but the possibility is pretty slim at this point in time.
When the government approaches DFI, development finance institutions, or maybe the likes of even the IMF and the rest of them, they usually would get it at concessionary rates. I mean, do you foresee, can this government count on getting such rates?
Well, we know the World Bank and Co have frowned at certain policies, things like fuel subsidy. We had the previous speaker, Mr. Chidoka, talk about how unsustainable the fuel policy current subsidy is. And we know that World Bank, IMF and Co have frowned at this, and these are some of the requirements that they have put down to allow Nigeria access the Eurobond market. But then again, you still have countries like China and Co and their own agencies that are willing to tap into the Nigerian market, the African market. And one of the ways they do that would be to grant such concessionary loans to Nigeria. So, I mean, the possibility does exist for sure. And I think it's an avenue that they might look to explore whilst they wait to see if something will change fundamentally in the Eurobond space that would allow them to come out to borrow at much more acceptable levels for them.
Okay, I'd like to get your thoughts on this other story that we're focusing on today. The CBN instructing banks to accept indemnity for online funds transfer. They said 25 million a maximum transfer limit for individuals, 250 for corporates. What are your thoughts on this?
Well, I guess, I mean, all I can think of is that they're looking at how they can limit fraud that's happening. We know that online transfers have jumped significantly in Nigeria, and I guess for the central bank, it's an avenue they'll be looking at. If we were to look at the growth, we've seen a growth of about 70% over the last, between 2019 and 2020, there was a growth of about 75%, with regards to online transactions. You know that with the thing the central bank has done around reducing amount that people can withdraw over the counter, reducing amount that you can issue with regards to checks. I mean, we only have a 10 million limits, be it a bank draft or be it a personal check. That makes online payments the easiest form of transfer. And with that, we've seen significant rise in those volumes. And I guess the central bank has decided to put an eye on it to try and ensure that the banks are protected for those who decide to use the online channels for their transactions.
Now, we have just about 1 minute left. I know that, I mean, cyber fraud is a bit of an Achilles heel for banks, and I know that they spend billions, every year to ensure that, at least they limit it. Do you see this number increasing in terms of the investments made to secure this area?
I mean, definitely it's expected. Even though your clients or your customers sign indemnity as a bank, you still wouldn't want a situation whereby a lot of fraud happens, and well, you try to absorb yourself based on the fact that you have this supposed indemnity that central bank has asked various customers of the banks to get. So definitely cybersecurity technology, we know, are things that most of the banks are spending huge on, are trying to spend quite a lot of money on trying to improve their systems. And not even just the banks, regular corporates and co are all looking at ways to improve cybersecurity. So I definitely expect the banks to continue to increase their outlay when it comes to such transactions.